These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, that end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will record a transaction related to the sales receipt and deposit into our bookkeeping problem in Excel, keeping in mind how that same information could be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to first take a look at QuickBooks quickly and then go back to Excel and enter this data into our Excel worksheet. When thinking about QuickBooks, we're looking at the customer page, the home page. We're going to look at a sales receipt. That's going to be QuickBooks terminology for saying, if we had a book problem terminology, that we're going to make a sale for cash rather than making a sale on account, meaning rather than getting accounts receivable and providing the work, or in this case the goods, which will be a guitar in this case, we are getting paid at that point in time. If we had not gotten paid, we would have the create invoice, which would then go to the receive payment we would see receive in the mail at some point in the future, and then we would make the deposit. The create sales receipt, as it would be as if we were to buy something in the store, would bypass these first two items and of course be the point in time where we're going to have the transaction take place, the sale happen, revenue being recognized, and the form of payment being made at the same point in time. If we were to look at this sales receipt item, we're going to have a customer. We're just going to type in the customer. If it's a new customer, then within the accounting system, we would just add the new customer, and that would allow QuickBooks to set up a subsidiary ledger as we go through this process. Then we're going to set up the rest of the information. We're going to have the check type, which is going to be the date. We've got the sale number going to automatically populate. And then we just need to know the item number. And if we can imagine that they brought the guitar up, which is an Epiphone Les Paul, then we would just type in the ELP, and the rest would populate for us pretty much, which would be the quantity of one. The rates would automatically populate at the 500 in this case. We're also going to calculate the sales tax 5%, which will be $25, which was 500 times 5%, gives us $25. The 500 then, plus the $25 sales tax, gives us what we expect to receive from the customer, 525. Pretty easy data input screen to go through. When we think about it, however, the transaction is a bit more complex than just the data input screen in that, let's think about what happens. One, the sales receipt means that we're getting paid, and we would put it into cash, but not yet into the checking account. We're going to first put it into this account, undeposited funds, the funds we have that we have not yet gone to the bank with. And then the other side is going to be usually sales or revenue, and that amount's going to be for only the 500, the sales price, not the total amount we expect to receive, the 525. The difference will have to be recorded as well because we expect to get this $25, and that then needs to go into a payable, which will go to something like sales tax payable because we owe it in the future to the state or whoever is charging the sales tax. Then we have a whole other side of this, and that is that we have the inventory going down and the related cost of goods sold, two pieces not on this at all, meaning I don't know what the cost of goods sold is based on this information, but QuickBooks does based on this item that we are using. That item will tell QuickBooks what the cost is as well. Let's go through the same information in Excel. Within Excel, we'll enter the same data, and we are going to enter, remember, if we saw a book problem, the book problem would basically be saying that we made a sale of inventory and received cash for it rather than it being on account. So that means that we can ask our question, is cash affected? It is, but we're not getting the checking account in this case. We're going to put it into the undeposited funds, Undeposited funds like cash accounts have a debit balance because they're assets. We're going to increase it by doing the same thing to it, which in this case will be another debit. So we're going to copy the undeposited funds, scroll down to the next open area. The date is going to be 2/12. Let's put that one more time, 2/12. And I know we're jumping around on the dates a little bit on this second problem here. We'll put the undeposited funds on top in B20, right click and paste 1, 2, 3. The amount of the undeposited funds is going to be the sales price plus the amount of sales tax. So we can calculate that a couple different ways. If we had the sales price of $500, sales tax times 0.05 gives us another 25. If we were to add that to the original price of $500, that'll give us 525. It's helpful to do that in one calculation, taking the 500 times 105% or 1.05, that too giving us the 525. Let's do that one more time in our formula here in cell C20 by selecting equals 500 times 105 or 1.05. There we have it. And then the other side is typically going to go to sales because we earned revenue. Sales is down here at the bottom, and we have it goes in order: assets, liabilities, equity, income, and expenses. We're talking about merchandising sales. We're selling merchandise. That merchandise, guitars, and it has a credit balance. We're going to increase it by doing the same thing to it, which in this case is a credit. So we're going to copy the merchandise sales. We're going to put that in B21, right click and paste 1, 2, 3. The amount, however, is only going to be 500, the sales price, not including the sales tax. We don't get to keep the sales tax, not part of our revenue. So we're going to say it's a credit of or negative of 500. Then we have the difference, the 525 minus 500 is 25. Or we can just do that, I'm going to do that with the negative sum function. We can also take 500 times 5%, which would calculate the same amount of sales tax. I'm going to use the plug formula. We're going to say negative SUM, double click the sum function, and then highlight these cells. And it's just going to take the sum of those two, this a positive number, this a negative, and therefore taking the difference, which is a credit or a negative of 25. That then needs to go to the sales tax payable account here. It is a credit balance. We're going to increase it by doing the same thing to it, which in this case is a credit. So we will copy the sales tax payable. We're going to put that in cell B22, right click and paste 1, 2, 3. We're going to highlight these second two. I'm just going to indent these by going to the Home tab, Alignment Group, Increase Indentation. We have now once again journalized the journal entry in the general journal, and now we'll go through the process of posting to the general ledger. The undeposited funds account here, we're going to post that to the same area on the general ledger. So the general ledger, here it is, third to last asset account. Before we do, make sure the screens are frozen. That'll make it a little bit easier. So we're going to go up to AJ1. We're going to go to the View tab, the Windows group, Freeze Panes, and then make sure that your panes are frozen. And click that, and then when you move over, it should be a little bit easier. So then we're going to go find this. It's going to be the third to last account, so we're going to go to the right. We're looking for undeposited funds. Then if we scroll down, there it is. It's in AU22. So AU22, we're going to select equals and point to this 525, bringing the balance up from 300 by 525 to 825. Scrolling back over, we're scrolling back up. We see that 825 here as well. Then we're going to go to the merchandise sales. Here are the merchandise sales. It's in order on the trial balance. It's a sales. It's going to be assets, liabilities, equity, and then revenue or the sales items down here. This is what we want, the first one. It's going to be in the same order from the trial balance here to the general ledger to the right. So we're going to scroll over to the general ledger. Looking for merchandise sales. We've got assets. We've got liabilities, equity. And then here are the merchandise. So we want to be in cell BH29. So we're in cell BH29. We will say equals and then point to that $500. That's going to increase this balance by 500 to 500. Scrolling back to the trial balance, we're going to scroll back to the trial balance. We should see that same 500 on the trial balance right there. Next, we're going to record the sales tax payable. Here is the sales tax payable. Scrolling up, we can see the sales tax payable here on the trial balance. Third to last orange or liability account will be the third to last orange or liability account on the general ledger as well. So we're going to scroll to the right, looking for that orange liability account. There it is, sales tax payable. We want to be on the credit side. We're in cell BD25. BD25, we'll say that that equals, point to this 25 and enter. Amount goes up to 148, that what we owe for the sales tax payable to the state. Scrolling back over, we see that same amount here on the trial balance. That's going to be the first component of this transaction. We also have the second piece, and that's going to be the fact that we have cost of goods sold and inventory, or I would usually think about it as inventory is decreasing because we gave inventory in order to help generate revenue. So this needs to go down, and the related cost to that, cost of goods sold, the expense, will be the other side, the debit, or increasing the expense, decreasing net income. So inventory, we know it needs to go down. We don't know the dollar amount yet. We're going to go find that on our worksheet, but we know it does need to go down and it has a debit balance. So to make it go down, we'll do the opposite thing to it, which in this case is a credit. So I'm going to copy this item. We're going to scroll down. I'm going to skip a couple lines. I'm going to skip a line to put a new journal entry, skip another line to put it on the bottom. So I'm in cell B25. Right click and paste 1, 2, 3. Now I'm not going to put the amount yet. I don't quite know it yet, so we'll just put the account first. So we'll go to the Home tab, Alignment, increase the indentation, and then the debit related to this, the expense of us consuming the inventory in order to help generate revenue, is called cost of goods sold. So here's the cost of goods sold. It is an expense item. We're going to copy that item. We're going to put that on top in cell B24. Right click and paste 1, 2, 3. There's our journal entry. We just now need to know the amount. The amount would not typically be on the sales sticker when we run the process. So we got to basically go to our worksheet over here that's tracking inventory. It's backing up this number here, backing up that number on the inventory assets. So we're going to scroll to the right and find that. So we'll keep on going over here. We're looking for the inventory assets. So I'm just going to keep on going until we get to our subledger. And scroll up. This is going to be the first one. We got another ELP, that's our most popular item. And we're going to say here that it is on 212. I'm in cell CE9. And we're going to say that we made a sale here. So we're tracking the cost of goods sold. So we're tracking what is left and what has been sold. So we're going to say that how many units do we have? Remember that we're using an average method. So over here, all we have is this one guitar at $400. So that's what we're going to put in this new line item. We're going to say as of this date, we sold that one guitar at 400 and multiply that out. And this equals this one guitar times the 400. It means that we paid, it was for $400 cost. What do we have left? Well, we had one guitar. We sold that one. We now have 0 left. I'm going to do that with a formula by saying this equals that one minus this one. Enter. Costs the average of 400. So it's going to bring that down. And then, of course, if we multiply that out, it's going to be 0 because it's going to be 0 times 400. And we'll have nothing left. So our entry then here is going to be $400. That's how much it cost us. We sold it for $500. It cost us $400. We're going to put that in the debit and the credit. When we go to our worksheet, so that's over here on the freeze pane, so that's way over in C24 and D25. If we go back over here and scroll down to the end then, we see this formula at the bottom. We need to update that formula. So we could do that by double clicking on it and seeing what is now in the formula. Scrolling all the way back up and we see this 400, that's CP8, and we need that to be going to CP, I would believe 9 now. So it needs to go down one. That's going to be the first item here. So I'm going to make that 8 a 9. And enter, and there we have it. If that's a little confusing, you could just redo the whole formula, just delete the formula, go equals, scroll all the way to the top, select the last one in each column. So I'm going to say that one plus, here's the formula, scrolling down, that one plus, here's the formula, scrolling down, that one plus, here's the formula, scrolling down, and so on and so forth, plus this one, plus the second one, plus the second one, plus the last one, and enter. So that's that 1,712. Once we complete the journal entry, once we post the journal entry, we hope that this will be the amount in the inventory amount for the trial balance and general ledger. To go back over, I'm going to put my cursor on this side of the freeze panes and select the right arrow a couple times, and it should just bounce back. So now we're back over here, and we're going to post this now. So here's what we have. There's the journal entry we need to post. So first we're going to post the cost of goods sold. Here it is on the trial balance. We're going to scroll to the right till we find the cost of goods sold on the general ledger. So scrolling right, it's in order: assets, and then liabilities, and then equity. There's the cost of goods sold. So we're going to be in BK22. We're in BK22. We're going to select equals and point to that 400, bringing the balance up to 400. Scrolling back to the right, we're going to find that same amount on the trial balance. So here it is on the trial balance. So we increased revenue by 500 and then increased the expense. So the net increase in net income is the difference between those two. Next, we're going to record the inventory assets. So scrolling up, we see the inventory assets here. We're going to record that piece, and that's going to be the third account up here. So it's going to be the third account over here. So we're going to scroll over to the third account. We're going to scroll down. It's the inventory assets right there. It's in AQ25, so we are in cell AQ25. We will select equals and point to that 400 on this side. Actually, I'm going to delete that. It should be on the credit side, so we are in AR25. AR25, and then equals, and then point to that 400, bringing the balance down from 2,113 to 1,713. Scrolling back over, we should see that same amount on the trial balance. And as we recall, this is the number that was on the subsidiary ledger that we created from the subsidiary ledger, so that should tie out, or does tie out as well. We're now going to see a look at the financial statements and see what's going on with the financials. So we're going to go to the checking. I'm going to go up top. Actually, first let's unfreeze the panes. So we're going to go to the View tab, Windows Group, Freeze Panes, and Unfreeze the Panes. And then we're going to go up, and I'm just going to point to the financials to see what has changed. We changed the inventory. We did something to that. And scrolling down, we did something to merchandise. So we're going to go see that. We did something to cost of goods sold. So we'll go take a look at those items on the financial statements. Scrolling to the right till we find these financial statements, we see that cash has been changed. We got the inventory changed. We see that total assets still equal liabilities plus equity. There was an impact on the income statement. We know that revenue went up by the 500, as did cost of goods sold. Net increase in gross profit, $100. That will be the same as in the ending balance down here as well. Our ending balance currently a loss at 246. And we could see that being carried down to the statement of equity, contributing to the total balance of $143,929. That too found on the balance sheet, $143,929. Hello, in this presentation, we will record a transaction related to the sales receipt and deposit, focusing this time on the second piece, the deposit portion, into our bookkeeping process in Excel. Keeping in mind how the same information could be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We will first take a look at QuickBooks and go through the process we have so far, and then go to Excel and record the transaction. What we've done so far is we had the create sales receipt. So we started here last time. We created a sales receipt, which was the sale of a guitar in our case, and we received payment at the same point in time. We are now going to go straight to the record deposit item, the second point, this being something that hopefully will be done at the end of the day after we collect all the sales receipts for the day. Scrolling down, we have the deposit section. If we clicked on the deposits, then we're going to click off all of the deposits that are still out and outstanding at this time, in this case being these 3 deposits, including the current sales receipt that we have. And we're going to then deposit that into the bank. It would look like this, grouping deposits together to get to 825. This then, when we record this, will increase the checking account by the 825, grouping them together in that format. And the other side would be decreasing the undeposited funds account. Let's take a look at this in Excel. Within Excel, we're going to see these items here. We're going to record this same transaction. And first question we typically ask is cash affected? Is the checking account affected? We're going to say yes, it is. We're going to deposit this information into the checking account. Therefore, we will debit the checking account, increasing the checking account. We're going to say the date is going to be 02/12. Let's do that again, 2/12. And we're going to copy the checking account. So I'm going to copy the checking account, right click and copy. We will then have that as our first account in B27, right click and paste 123. We're going to put the entire amount there. Last time we collected the 525, but we're going to say that there were prior transactions in the undeposited funds, and if we look at the undeposited funds, we have a total of 825 there. So that includes the 525 we have just entered in the prior transaction, plus what was in there from prior transactions, which we need to take out of there and post to the, or deposit into and then post to the checking account. So 825 is going to be the amount, 825, and the other side of this transaction then being undeposited funds, us in essence moving it from the undeposited, representing cash that we just have on hand that we haven't put in the bank yet, to the checking account representing cash that has been deposited to the bank account. So we're going to right click and copy undeposited funds, scroll back down, put that on the bottom in B28. B28, right click and paste 123. We will then go to the Home tab, Alignment Group, and increase the indenting, and then put the credit here in D28, which would be a negative of that number. There's our journal entry. We're going to debit the checking account. We're going to credit undeposited funds for that $825. So now we're going to record this. We have journalized the journal entry into the general ledger, and we'll go through the process of posting this to the general ledger. We actually journalized it to the general journal, and now we'll go through the posting of it to the general ledger. Here's the checking account. So checking account is our first account here. It's going to be the first account on the general ledger. Then we're going to be down here in AM11. And we'll scroll down a little bit, and we're going to have to scroll down a little bit more to find this. That's okay. We're going to say equals in AM11, scroll down a tad, and get to that 825 and enter. So that's going to bring the checking account up to 104,794. There it is on the trial balance as well. Scrolling back down, we then have the undeposited funds. And if we look at the trial balance, here's the undeposited funds on the trial balance. It's going to be in the same location on the general ledger. So we'll scroll to the right till we find the undeposited funds. There they are. I'm going to scroll back over, actually. I'm going to scroll back all the way over, and let's freeze the panes to make that a little bit easier. So we'll scroll up to the top. We'll put our cursor in AJ1, go to the View tab, and we'll go to the Windows group, freeze panes, and then we'll scroll down and we'll find that undeposited funds once again while we can still see these first couple accounts. Scrolling back down, there's the undeposited funds. We want to be in the debit side, so we're in AU23, AU23 equals, and we will then point to this 825, bringing the 825 balance down by 825 to 0 or 1. It's off by rounding. In this case, that's okay. We're going to scroll back to the trial balance. We see that same rounding 1 right there. And now we're going to go to the financials and just see what happened to the financials. Before we do that though, we're going to go to the View tab, the Freeze panes, and unfreeze the windows. And we've done something to the checking account, so I'm just going to point to that on the financials to see how it's updated automatically, and to undeposited funds. So once again, I'll just point to that on the financials. We'll scroll all the way to the right to see those on the financials. I'm just holding down the right arrow. We're over here in the columns of BW column. All right, and then we have cash here has been adjusted automatically. Undeposited funds 2. That sums up to the current assets, and the total assets equal the liabilities and equity. Still, there's no effect on the income statement from this transaction. There was in the prior transaction, but this transaction was just moving it from one cash account to another. And therefore, we have the same net loss of 243, 246. That amount being part of the in calculation in the statement of owner's equity, 143,929. That amount part of the balance sheet of 143,929. Hello, in this presentation we will be recording a sales receipt and deposit from a new customer within QuickBooks Pro 2018. If you've been following along with us, we will be continuing with the Get Great Guitars. If not, that's okay. We can follow along with the entering of the sales receipt and the deposit. We'll be covering what the sales receipt is, how to enter the sales receipt, and what the journal entry will look like, as well as the recording of the deposit, how it relates to the sales receipt, what will happen to the financial statements when that is done. If you have the backup up until this point, then you can restore that. Go into the file and restore. We're going to have the open windows open, so we're going to go to View, Open Windows here, and then have the open windows open. I'm actually going to close everything except for the Home tab, so I'm going to close everything up. We have the Home tab only open window. If you don't have the Home tab open, it's in the Customers, or I'm sorry, in the Company and Home tab. We're going to be working here in the Customers section. What we have is the receipt of a sales receipt, which means that a customer is in the shop, we're selling guitars, purchased a guitar from the shop, we're going to get paid at the point in time of the sale, as opposed to when we have an invoice in which we bill the client and we expect payment in the future. So an invoice in our case, if we were to be selling guitars, maybe more in the case of we shipped the guitars, the guitar went out, and we expect to receive payment in the mail, as opposed to if we're having a create sales receipt. We can imagine someone in the shop purchasing a guitar, and therefore we're going to create the sales receipt at that point. The journal entry recorded when we have the create invoice, or the accounts affected, would be that the receivable would go up, people would owe us money. The revenue would go up, we would record the sale. We would also have, if we're selling stuff, as we are here, selling merchandise, another half to that, one being the inventory going down for what we sold, in this case, guitar or guitar equipment. And then we're going to have the cost of goods sold on the income statement. When we have the sales receipt, only difference then is, of course, that we're going to be receiving payment in some form at that point, and therefore not increasing the receivable, the amount people owe us, but some form of payment, typically cash. So let's see what that looks like. We're going to create the sales receipt, and then we're going to record the deposit related to that sales receipt and any other deposits that we have at that point. Looks like there's 2 of them. So we're going to create sales receipt, and we're going to have a new customer. So if we select the drop down, we got Garcia Guitar, and it's not here at this point. So we're going to have to add that. Fastest way to add the customer would be just to type in customer name, and then we're going to select tab, and it's going to ask us to add the customer. We're going to select tab, and it's going to say, do you want to add the customer? We don't have the customer in our list. We're going to say yes. We're going to add it with the quick add feature rather than the setup, meaning we are not going to put the address and the phone number and the contact information, which we would probably want to do if it was a customer that we wanted to get repeat business from. But for purposes of the sales receipt, we just need the name here, and that's what we're going to be working with at this time. We're going to keep the template we are using. We're going to say that it was a check that we received. That's the form of payment. The date's going to be 02/12/21, We will be working this problem within the future, so we're going to say February 12th, 2021. The sales number will populate on its own. Sold to Garcia Guitar. We don't have an address because we didn't populate the address within the customer field, so we're going to keep that as is. The check number, we're going to write 8541. Now that's not the check number for a check that we are writing. That's the check number of the check that we are receiving, and it's good to have the reference there. It's not required, but it's good to have. Then we're going to say the item that we sold, the guitar that we sold, was an ELP. If we select the drop down, we see it's going to be this item there. If we type it in, ELP, it should pull up, so there it is. And if we say tab, the description will appear. Tax, quantity, we're going to have one of those. The rate is going to be 500, therefore the amount 500. We do have sales tax, that at 5%. And that 5% is an example number. It's going to change from state to state. It's going to be an item that we have to set up to calculate the sales tax and make sure that that's set up within the preferences to calculate the sales tax if needed. And that will be our total amount. What will this do when we record it? We see the 500 will increase the amount that we received, in this case a check that has not yet been deposited, therefore increasing undeposited funds rather than the checking account. And the credit of that 500 is going to go to sales. There is going to be a second half of that, however, because we are selling inventory. That's going to be cost of goods sold and the related account decrease in inventory. Note too that the undeposited fund is going to be for 525. The sales amount will be for 500. The difference of 25 is what's going to be recorded in what is due in terms of a liability to the state for sales tax. Let's take a look at the cost. Where could we find that? Just to know where that could be found. Note that it's not on the sales receipt because we don't want to show it to the customers. In order to see it, we can go to the lists up top and go to item lists. And if we find this item, this ELP right there, we then open that up. I'm going to go to items at the bottom and we're going to edit item. And that will give us what the cost was. So it cost us 400. That 400 is not on the sales receipt. Only the sales price of 500 is. But we know that this computer will record that for us. After we record it, we can take a look and see what happened in terms of the cost of goods sold and the decrease in inventory related to that 400 amount. Closing this back out. We're back to our sales receipt. We're going to say save and close, and then we'll go and see what happens in terms of our financial statement. Save and close, and it's going to say you have changed the transaction. I'm going to say yes, we want to record that. And we're going to go to our balance sheet first. So let's go to the reports up top, scrolling down to company and financial, and then scrolling down to the balance sheet standard. We're going to change the date range, top left, customize the report. And it's going to be from 01/01/21 to 12/31/21. So January 1st, 2021 to December 31st, 2021. Okay, there is our items. We know that we received a check, but it didn't go into the checking account yet. It went into undeposited funds. So we're going to double click on undeposited funds and take a look at that. Here it is there. There's the 525. If we double click on that, there is the sales receipt that we have just generated. So that's for the full 525, including the sales tax. That's what we got the check for. If we close that out, let's go to the income statement side and see what the sales receipt was for, what the revenue was for. If we go to the reports, company and financial, profit and loss, and then change the dates from 01/01/17 to 12/31/21, I should say, not 17/21. So January 1st, 2021 to 12/31/2021, that being the year that we are working this problem in. In the merchandise sales, we should have an increase there from this transaction, from this sales receipt. Double clicking or zooming in on that, we see the 500 there for the Garcia guitars. So it's only the 500. If we double click on that, we're only taking the 500, not the added 25, although we received 525. That difference of 25 is going to be what is owed to the state. So we're going to close this back out, and we close this back out. Take a look at that. That's going to be on the balance sheet side. Go into the balance sheet, and then we're going to go to liabilities, where we have the sales tax payable. Double clicking on sales tax payable. We see that 25 that we owe. Double clicking on that 25, we see the amount, our same sales receipt, and that 25, the sales tax calculated on that sales receipt. We're then going to close this back out. Close this back out. Now let's take a look at the inventory item. So if we scroll back up to the top, we have the other current assets, we have the inventory item. If we double click on the inventory, we see the Garcia guitar here. There's the 400. If we double click on that, we see the sales receipt, and we don't see the 400 here. Why? Because that's going to be part of the cost that we're not going to put here, but it is recorded by QuickBooks on a perpetual inventory basis. Closing this back out. Now note that we do have some other items here that were entered in a date after this, so our dates are varied a bit. We're going a little bit back and forth in this problem. It is going to be an example problem, so we'll have to deal with that a little bit. We're going to close this back out, and then we'll go to the profit and loss and look at the other side of that piece. The inventory decreasing and the cost of goods sold, then the cost of the goods that we are selling, the expense related to the revenue that we are earning. Double clicking on that, we see Garcia guitars here. There's that 400 again. There's the other side of that. So this simple sales receipt actually has a lot going on. If you can understand what's going on with the sales receipt in terms of the financial statements, it's worth going back and forth and making sure you understand those relationships. Going to close this back out. Close this back out. We're going to go back to the home, and now we're going to make the deposit. Now we have 3 deposits that we need to make. Remember that when we recorded the create sales receipt, it put the amount of the checks in undeposited funds. Now we want to group those all into the same deposit that we will be making at the bank and deposit them at the same time. That's what we'll do now. We're going to say click the deposit. Now, since we have 3 deposits that we need to deposit, this window will pop up. If we had no deposits that were in undeposited funds that we need to deposit, then this window would not pop up, and we would only see the window behind. So in this case, we want to deposit these 3 checks. So I'm going to check all 3 of them out, and when we make the deposit, we're going to group them all together and deposit them into the bank at the same time. That then will group on the bank statement at an amount of $825, and will be the same grouping we will see on our books, therefore making it easier for us to reconcile the bank account at the end of the month. So we're going to say OK. There it is. There's the $825. We're in the checking account. That's the only checking account we have. If you have multiple checking accounts, you want to make sure you're in the correct one. We are going to make the deposit as of 02/12/21, and the deposit's going to be the deposit. That will be it. Once we record this, it's going to increase the checking account with a debit, or increase the checking account, and it's going to decrease the undeposited funds down to 0. So let's record that and check it out and see if that's what actually happens. So we're going to say save and close. And then we're going to go back to the balance sheet and see what is going on with the balance sheet. We know that the checking account here then should be going up. Double clicking on the checking account. Scrolling to the bottom, we see this deposit here. There's the $825 there. Double clicking on that, we see the deposit of $825. There's that amount. We're going to close this back out then. And close this back out. We don't see, note, the undeposited funds. It went away. Why? Because it went down to 0. That's what we wanted to happen, but if we want to verify and look at the activity in the undeposited funds, one way to do that would be to go to Lists at the top, go to the Chart of Accounts, and then look for that undeposited funds, and we'll look at the activity within it. So it's recorded as an other current asset, so it should be at the top. If we just double click on that line item within the lists, we'll see the activity. There it is. There's the deposit. There's the decrease in there's the deposit, which decreased the undeposited funds to 0. And if we double click on that we should then see the sales receipt. If we close that back out, the deposit's actually right above it. Here's the deposit. There's the deposit. So they're both on the same date, and it looks like the deposit was put above the sales receipt, but they're both there, they're both on the same date. The sales receipt is an increase to the undeposited funds, and then the deposit is decreasing it back to 0. The way it was input here, we were at 0, then the deposit they recorded first, making it go negative in terms of the undeposited register, and then we had the sales receipt bringing it back to 0.